It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, November 17th, 2015. Boy, oh boy, do we have a jam-packed newsletter in store for you guys and gals here tonight. We got a ton going on tomorrow. Everything from rollover to inventory news. We got ranges. We've got channels. Going to be a lot of opportunities to learn and earn with us tomorrow morning. We open up our live trade room tomorrow at 8 a.m. Eastern Time. Look forward to seeing you there. Tonight's newsletter, jam-packed for you guys. Crude oil is bearish and rotating back to the lows from Monday's trading session ahead of tomorrow's inventory report. So our plan is to look for selling opportunities at resistance levels overhead while trading around that news on the black gold tomorrow. Be ready for, we get a rollover alert, we get a news alert on crude, and a range alert on crude for tomorrow. There's a lot of stuff to talk about for the crude oil market. On the S&P, the E-mini S&P 500 is balanced and range bound with a bullish bias this evening. Our plan is to look for seller failures at support levels tomorrow while using range rotation and the two-try rule. Boy, those buyers really strutting their stuff. They really held that price from going any lower. They didn't give anything back on them. We got a plan for the S&P. How about the gold? Gold is bearish, capital B this evening, and coming off a strong overshoot of the channel lows. We expect to see a bullish correction before getting the bears back involved again. The next push down. Want to stay patient here on the gold. We got a plan for the yellow metal tomorrow, and of course we couldn't forget about our good friends the euro. Right, the euro range bound with a bearish bias this evening. So our plan is to look for selling opportunities on the euro using range rotation and, of course, the good old two-try rule. As you can see, we got a plan for crude, E-mini S&P, gold, and the euro for tomorrow. We'll also work some education in there for you as well tonight. But before we get into today's charts, please remember this video is best watched on our trading blog here at Sideways Markets. I want to remind you to make sure you're watching this video on our trading blog at Sideways Markets. If you're watching the video on our YouTube channel, there's a link right in the description that'll take you over here to our trading blog at Sideways Markets. A couple of reasons why. First of all, upper left-hand corner, if you're not a member here at School of Trade and you'd like to take a test drive of our live trade room, right? Join as a member for a day. Grab your free pass in the upper left-hand corner. In the lower left-hand corner, there's a spot for you to register for our nightly newsletter mailing list. All I need is three things: your name, your email address, and then check your inbox. That way I can verify we've got the right email address. Right below the video tonight, you'll see a spot to download all the charts for tonight's video, right? Click on that link and you can download those charts you'll see in tonight's video. And then, of course, on the right-hand side, you can register as a trial member here at School of Trade. It's not the same thing as the free pass, right? That will give you a trial membership run of our course materials where you'll learn all about how we trade here at SOT. You can get more information about membership. And of course, don't forget, you can always ask for help 24/7, 365. No question too big or too small. Just use that live support button on the right side of the blog. I think we're ready to rock and roll here, guys. We got a pretty jam-packed newsletter in store for you guys. Before we get into it, though, we do have tomorrow, Wednesday, November 18th. Boy, oh boy, you know Thanksgiving's right around the corner. Don't forget to get that turkey ready. No offense to the turkeys out there. Tomorrow, Wednesday, November 18th, we do have that inventory report tomorrow morning at 10:30 a.m. Housing starts at 8:30, and the FOMC meeting minutes tomorrow afternoon. My big news tomorrow is going to be that inventory report. Don't forget, on Wednesdays, as long as Monday is not a holiday, we're going to be really sitting on hands trading around that report tomorrow between 10:15 and 10:45 a.m. And if you want my opinion, anything after the inventory report tomorrow is gambling, so please be careful with your risk capital tomorrow. I got a plan for you guys on crude, though, and let's jump right in. Looking at crude oil futures, heads up, this is the 12:15 contract on crude. We do have a couple alerts here for you guys tomorrow. First of all, the inventory report, like I said, tomorrow morning at 10:30 a.m. Eastern Time. Avoid trading from 10:15 to 10:45. And again, you're gambling with your account after 10:45, after the inventory report comes out. Really, all of this analysis almost gets thrown in the trash can tomorrow morning after the news comes out, because it's just filled with gamblers, and it's not a very reliable environment on Wednesdays the moment that news comes out. Now, we always look for a couple opportunities, between 10:45 and 11:15, but we're always very hesitant to put too much risk on after that news comes out. It's one of those situations where, yeah, we might be able to make some money off of it, but we really take a lot of pride in the fact that we focus on the most reliable times of the day, and that does not include the inventory report, right? So we look for trades during the most reliable times of the session at the most reliable areas. We place our profit targets and our stop losses at the most reliable areas of support and resistance, right? So, tomorrow morning, just be careful when you trade in that. When you're trying to trade after 10:15 tomorrow, it's going to be a little bit more difficult, less reliable. And then also, we are still watching for rollover on crude right now. As I'm doing this right now, the 12:15 contract is definitely still has control right now. So, it's always a little bit of a moving target. We know around the 16th, 17th, 18th, 19th, we typically get rollover right on a Wednesday, with inventory reports, almost as if to make it a little more fun, right, and interesting on a Wednesday. But not tomorrow, though. We will most likely, I'm about 99% certain we'll be trading that 12:15 contract tomorrow. So heads up on news. And we got one more day, about 24 hours from now, and then we'll do rollover to the 116 contract, all right? So you heard it here first. Now you guys will plan for that tomorrow. Now, what's the chart telling us? Crude oil is bearish this evening. And just like we said in last night's newsletter, once again, we gave them one day. The bulls had one day. That's it. That's all they got. That's all they got, right? And they couldn't hold it. Once we came in this morning, and we saw those buyers couldn't hold here, and then when we saw the buyer, when we saw the sellers grab it here, it was pretty much done, right? You're done. Buyers are toast. Sell everything you can get your hands on. Just make sure you don't sell into support. That was pretty much the only thing we had to worry about today. Today really was one of the easiest days we've had in a long time. You had to wait to see if those buyers were going to fail. Once they failed, we get the proof from the sellers. Just about 8:30 this morning, before that news kind of kicked things off today, and then just rolled right over. It was again, if you're in the trade room today, a very, very, just an easy day, easy money out of the crude market today, which is good because tomorrow's an inventory day, so we may be doing a little bit of sitting on hands tomorrow for crude. So we know we're rotating now, right? There's that. Let's get this out of here just for a second, and we can see here, there's the previous low of day. Right, so we know that down at 40.06, you've got to think that's what sellers are gunning for right now. Now the problem is that we have the inventory report tomorrow. So really, what we usually see price build into the inventory report, right? So think about yesterday's low, yesterday's high. This, of course, is last Friday's high, 41.88. So this is the range we're coming off of right now, right? So we came off, we couldn't hold. We're expecting range rotation. Right? We're expecting to see range rotation down to that 40.06. Okay, that's what we're expecting. So with that said, how are we going to get there? That's the question. Now, again, ahead of inventory reports, we usually see priced in action, right? So here's one scenario. One scenario is ahead of the inventory report, we run up tomorrow morning, possibly all the way up to that 41.88, and then the news comes out at 10:30, and then see ya, suckers, we run it all the way down to finish the job, right? Kind of anticipating the bulls pricing in that report basically just for the benefit of the bears to get a better price to sell it back down. That's one way that we'll likely look at it tomorrow. Another way tomorrow would be the opposite, right? So we drive lower down to that 40.06. We get some sellers trying to sell that low, and that's exactly what the buyers are looking for. The news comes out, 10:30, and then blammo, right? We take off back to the range high again, right? So those are the two kind of scenarios that I see. If I had to guess right now, the reaction to the API number was quite bullish. So if I had to guess right now, and I'm not even looking at the news report, I have no regard whatsoever for what the DOE or the API says. Maybe get a bullish reaction to it up, and then right back down here into the news tomorrow. So looking at this with a bullish reaction off the API number, my gut tells me, and my gut is not a reliable strategy whatsoever, but this is what is likely to happen tomorrow, right? We run up 1030, buyers get caught holding the bag, and we finish the job down to 40.06, right? So that's what we'll be hoping for tomorrow. Who knows, right? Again, all bets are off. It's inventory day tomorrow, so who knows? Bottom line, though, is we can definitely see we have a bearish market on our hands right now on crude. We've got that bear channel down. Quite symmetrical on the way down, as you'll notice, right? 1, 2, 3 on the way down, and we undershoot that low. So we know we're definitely bearish. We're expecting a bullish reaction here just because of that undershoot, because of the measured move. So there's no question in my mind we go higher. The only question I have is where, right? How high will we go? How high will we go? So our plan right now is to look for counter trend correction, buyer failure, and sell it back down, right? We've got resistance areas waiting for us overhead. Let this baby go up. Wait for the buyers to fail to buy the pullback, and that's your first shot to be a seller. If you don't want to sell the failure, look for the reversal pattern, right? If you don't want to sell the reversal pattern, wait for it to go up, and then as it starts coming back down, right, you'll have a lot more confidence. You won't have to read it so well, and you can just sell the rips on the way back down. Again, tomorrow's inventory day, which means anything can happen, so we're definitely going to have to look and see tomorrow morning what this looks like as it pushes higher or lower, and depending on how that plays into our inventory report. Don't forget, you don't have to trade this market alone tomorrow. One of my favorite markets, crude oil. I'll be trading this market tomorrow morning live in real time in our trade room. So again, right now, err the side of the bear side. But going into the news tomorrow, all bets are off. There's no way of telling what the reaction is going to look like and what's going to come afterwards. So really get to it early. After 10:15, you're sitting on hands tomorrow for crude futures. Now you've got the plan here. Now you get the plan. All right, moving from the black gold, the crude oil, to the E-mini S&P 500. We got a bit of a megaphone here right now, but this is really just one big trading range. Now, this is a follow-up of yesterday's, what I called a statement by the buyers on the S&P, right? We saw this gap down yesterday morning and then just wham! I mean, the thing just takes off, huge bull run, right? See, the bulls on crude oil should take a little bit of a notice on what the bulls are doing here on the S&P. They're flexing their muscles right now, right? They're holding this thing. They didn't give anything back. And you knew this could easily have pulled all the way back, right, off yesterday's kind of fear-based rally. So it's very, very interesting to see these buyers really hold. That definitely puts a little bit more firmness in this bullishness as we go into the end of the year. Apparently, the threat of raising rates, the good news is bad news, apparently that's not affecting us too much right now. So the S&P is balanced, range-bound, with a definite bullish bias this evening. And our plan, remember what I always say, guys, right? When I pass on to the trading room in the sky someday, I hope they bury me right in a range-bound market, because these are they're like handing out candy to kids, man. I love range-bound markets because all you're looking for is range rotation, the 2-try rule, and failures. So I hope that we can get some range-bound market action out of this tomorrow. This is always a very easy job. I love range-bound markets. You know, the hard part about a trending market, you know, it's funny because most rookies would tell you, give me a trending market, they're easier. But the problem is when you're trading a trending market, the best trades look like dog crap, and the ones that really look that you think are going to work the best, right? They don't really look very good on the chart. They work the best. The ones that look the best always end up trapping you in the wrong side of the market when it comes to trend following days. So give me a range day any day of the week, and that's what we have going on right now for the S&P. So the bulls didn't give anything back after yesterday's big run higher. This balanced market is clearly showing acceptance of this higher price around this 2050 area. Our plan for tomorrow is to look for counter-trend sellers to get trapped on the wrong side of the market as we rotate higher. So just a lesson on rotation, right? This happens to channels. This happens to ranges. We have a range right now. So you take that trading range, you project a couple levels above, couple levels below, and then we're going to look at rotation. Price rotates back and forth. Remember, there's a bull bias to this. So as it tries to break out of the downside, I'll give those sellers 2 tries to run it lower. If they can't get down to that next range level, it's going to get slapped all the way back up because of that pendulum, right? Remember we talked about this before? Think of that pendulum, right? It swings down, then swings back up, right? Okay? So range-bound markets are easy to make a dollar off of because you're expecting range rotation. When they break to the downside, if they can't get to that next range level, it's going to counteract, pendulum swings back around, and we go up to the opposite side, and usually we end up going all the way through to the opposite direction. Okay, now from there, give the buyers 2 tries, right? If they can't get it up, right, where do you think they're going? Yeah, pendulum swings back down. You got it, right? We go back down to the opposite side, and what's going to happen? They're going to try it again. They'll try to run down. Now, this time around, let's say they are successful. If they are successful, then we move into the range below us, and rotation continues there. Now we have another 2-try rule, right? They try to break out. If they can't go, the pendulum swings, and so on and so forth. It's a little bit difficult to describe it. I think I did a pretty good job of illustrating it. And by far, this is going to be usually, unless you're a freak of nature, most people, this is the last piece of the learning steps, right, that we take here at School of Trade, is understanding that range rotation, 2-try rule, and focusing, right, on the failures. So look what you're seeing right here, right now, right? So there's your range. Now, I drew the megaphone in, the trend lines above, the trend lines below. In all reality, you don't really need these, but I'll leave them on there just to make it look a little bit more interesting for you guys, right? A little bit of color on the chart. A little bit boring, the sideways range, but it's worth it. It's profitable, right? Sellers try once, sellers try twice, snap back up. We're expecting price to go back to 20.58 and a quarter, and more importantly, I'm actually expecting that price to overcompensate up to that 20.70.64. If it doesn't reach that high, right, if it tries and unfortunately can't get the job done, then we expect, right, 2 tries from the buyers. Let those buyers try twice, just like we gave the sellers a shot to try twice. If they can't get that job done, it'll go back to 24, right, 20.45.75. But again, it's not going to likely stop there. It's going to try to go down to that 20.33.21, right? And again, that's where if we do successfully get down there, then of course we'll then rebalance then into that next range, and we'll do it all over again. All right, guys? So right now, the name of the game is stay to the buy side on the S&P, right? At least for right now. All we have to work with right now is the chart's telling us. Buy side's the right side, or at least the most reliable side right now. Look for seller failure at support. That's going to be our plan for the S&P 500 tomorrow. Remember, all the channel lines, all the trend lines are great for traps. The range levels are the most important information for tomorrow. You heard it here out of my mouth. Let's keep going. Now you get a plan for the S&P. Gold is bearish this evening, coming off a strong overshoot of the channel lows, and we expect to see a bullish correction before getting the bears involved again for the next push down. We can see a bear channel, and that bear channel looks like the bears dipped a little bit too much into the honey pot, I guess you would say on this one, right? They kind of blew right through that low. Midline lines up, highs line up, right? That's an overshoot of that low, right? So think about the pendulum again, right? The pendulum swings a little bit too far, and now that pendulum now is going to counteract by swinging a little bit further, right, on the opposite side, right? The sellers get a little bit too punch drunk on the way down. The buyers see it. They aggressively buy. The sellers see it. They aggressively take profit, and price shoots right back up. Now, of course, in this bearish market, this sets us up for a counter trend or a measured correction, as we like to say. And that puts us what possibly could be back all the way up to that 1076.7 area, and that's where we'll look for the bears to re-enter the market. One thing we know for sure right now is this market is bearish. We also know the vast majority of that volume today piled up right inside that trading range, right? So keep an eye on this area after a bullish correction. And you know what's going to happen, right? So the buyers will take it higher. Well, they might take it higher. If they do take it higher, we'll be looking for the first opportunity with the buyers trying and failing, right? Because we know what's going to happen. The buyers are going to think this is a bullish market. We'll be looking for them to buy the next pullback, knowing exactly where their stop losses will be, and then we'll attack those stop losses with our sell orders, right, trying to sell into the stop losses, the buyers. And the reason why that works so well is because you're selling when the buyers are forced to sell right along with you, right? So we're looking at a bullish correction back higher here. If we get it, we look for buyer failure. We look for a reversal pattern. If you don't want to wait for the reversal or take the reversal, just wait to sell the rips on the way back down because your target will be back down at the low of day. All right, selling opportunities up at resistance areas after the measured correction and after the overshoot of that channel high on the gold. I could definitely see, though, this correction going all the way up as high as that 1082.7 to 1080.7 area. Could easily see it running higher here because of that real big dip down we saw today, right? So profit taking, bargain hunting from the buyers, right? And then we'll look for those opportunities to get short middle to late morning tomorrow on the gold. How about we wrap it up here with the euro? Not to be confused with the Forex pair, guys. I trade the currency futures contract. It's a more transparent market, much better tax benefits than trading Forex pairs. Yeah, you can't get away with a $200 account with futures, but when was the last time you get anything worthwhile doing it the easy way, right? So trading the futures contract here, the 6E, we're on the 12.15 here, and here's a scenario where we have a range-bound market with a little bit of a bear, well, definitely the bearish tone to it, but that channel's a little bit questionable. I have to say, honestly, that channel's a little bit questionable. It looks more like a range to me, right? But we definitely see, though, this is a bearish move down into that trading range. Same thing as the S&P, except now reverse it, right? On the S&P, we were looking for seller failure to be a buyer. This is a bearish market. We're looking for a buyer failure, right, to be a seller here, okay? So what you see now is we get that trading range, right? Sellers try once. Sellers are trying twice. If they fail, where are we going? We're going back to the opposite side of that range, right? 10678. But remember, if that pendulum swings down, it's going to swing back on the opposite side, which means they're going to try to run it up. Give those buyers 2 tries. If they can't get the old job done, guess where it goes? Back to the opposite side, right? 0649. And it's probably going to try to make a run at that 0620, right? So euro is range bound, bearish bias this evening. Our plan, almost identical to the S&P except the opposite direction, is to look for selling opportunities tomorrow on the euro using range rotation and that 2-try rule. We expect buyers to rotate price up to the highs of the bear channel and those range highs, of course, where we'll look for failure patterns to sell the highs of the range. Remember, whenever you see a trading range, the first thing you should think of is failure patterns, right? Because traders always confuse the move as being a trending move. So failure patterns are going to be the path of least resistance when we're in a range-bound market. If the buyers fail to test the range high at 0678, be ready for this market to collapse lower here. So expecting to see an attempt to get to 0678. If we fail to get to 0678, all hands on deck, sell whatever you can get your hands on, and we're looking for that 0620 for the target, which will definitely give us that channel rotation too, right? So rotate high down to low, low to high, high to low, low to high, and then back down to low. Okay, so range rotation. Again, you got to discount the value of the channel, right? In my opinion, this channel high is a phantom trend line, which means you're likely going to see some sellers react to it, but it's more likely to try to bust through it to get up to that high before we come down. So what I always tell my clients is when you're in a range-bound environment, discount the value of all the trend lines. The most important lines are those horizontal lines, those range highs, range lows, and range expansions. Guys, we get a plan here for the euro. Bearish on this range-bound market. Again, watch out tomorrow. If they run this thing higher, but they fail to get to 0678, oh, baby, this is going to be a nice, easy sell-off down to that 0620. On the gold, kind of a similar situation, right? We don't know how high we're going to go on gold, though. We're expecting an overshoot of that high, a measured correction, and then we're looking for selling opportunities up around resistance areas overhead. The S&P, the exact opposite of the euro, right? Bullish bias on that trading range. We're looking for seller failure to buy it back up to that 50, right, 58 and a quarter. We'll then expect the buyers to try once, try twice. If they fail, we'll expect price to come back down, possibly collapsing all the way back down to that 2033. And then last but not least, don't forget the market that really will be the one that's probably most challenging tomorrow, because we've got inventories and because we're probably going to be sharing volume between the 1215 and the 116. So I would expect to be a little bit light volume tomorrow. Throw in the self-fulfilling prophecy for the inventory report tomorrow, and tomorrow might just be a day where we really got to be careful tomorrow on crude. We'll be trading this real time tomorrow morning in our trade room that opens up at 8 a.m. Eastern time. Did we cover it all? I think we did. I hope we did, because we've been here long enough together today. It's always a great pleasure to have your attention for a few moments every evening. Don't forget, grab your free pass, register for the mailing list, join our free trial. You can also go to the website here at School of Trade. We get the best free trial in the business, guys. You're going to learn more with me in 1 week on my trial than you get anywhere else on the interwebs. I can guarantee you that. And don't forget, we got 3 levels of membership. That way everybody has a place to either kickstart their career or finally get the pieces of the puzzle put together if you're an experienced trader. And I've always got someone standing by 24/7, 365. Careful out there for crude tomorrow. Follow the bias on the S&P and the follow the bias on everything, but the S&P and the euro for the ranges. And don't forget, send me some feedback. My email address is jj@schooloftrade. Give me a like on the video on YouTube, and come out and join me tomorrow. Trade room opens up tomorrow morning at 8 a.m. Eastern time. If not tomorrow, I'll see you same time, same place for a Wednesday edition, a rollover edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? I'll see you next time. Adios, amigos. Bye-bye for now.